Bobby Cho of CMS. He is a well-known trader in the space. We've got him in for the Scoop Live. I think, is this your first podcast? Because I have to imagine back at DRW, they kept you like the Pope.
You know, I did one with Selkis when he was doing the Masari podcast.
Nice.
So I did that one. That was fun. But obviously, we talked about a lot of things more business related. I figure like today it's going to be a little bit about crypto, a little bit about life, right? Just generally what's going on. I feel all compared to you right now.
That's because I'm in a cramped sort of situation. I'm in my sister's bedroom in the corner because her roommate's doing yoga out in the living room. So I had to sort of set everything up in this really tight parameter. But in any case, aside from my podcast setup, you messaged me something interesting last night when we were chatting about what we would talk about, something poppy, and you said crypto is a no man's land right now. And so you've seen so many cycles. And what's interesting about your background is, you were at DRW, you sort of built that desk out early on back in 2014. Now you're starting your own trading firm, doing some VC investing in the midst of this health and financial crisis. So you have the context to see many of the cycles that we've experienced. But right now you're saying it's a no man's land. What do you mean by that?
Yeah, it's so like whether it's friends or colleagues in the space, they'll ask me, hey, what's going on in the crypto space? And I really feel like it's a no man's land. And what I mean by that is basically that one, we're kind of in this like price sideways movement right now. We just came off of local highs over the past few weeks and hit a low of like 3,700 or what have you. And so one, a lot of the deals that we're looking at, those models are a little bit broken now, right? They need to be revised with kind of updated forecasting of what's going to happen in the space. Two, we've actually been deploying more capital towards our active trading strategies versus our like investment side of things, mainly because we see a little bit more edge in some of the active strategies, given some of the longer term stuff that we're looking at. We don't know what the world's going to look like in 6, 8, 12 months from now, especially with where the crypto prices are today. And so I think it's really hard to like pinpoint on and pick individual winners in the space. So you tend to go a little bit more broad and probably go with more of the majors in the space, such as like Bitcoin or Ethereum and some of those more well-known coins that are out there.
No, that makes a lot of sense, and it resonates with what Pantera told me last week about how they're shifting from discretionary going long on certain coins to a more quantitative long and short approach to take advantage of the inefficiencies we're seeing in the market. You also are doing some VC investing as well. So we've talked about what the deal pipeline has looked like in the crypto market, and I've been surprised to see a lot of companies fundraising right now and a lot of deals actually going through. So we saw Binance this morning. One of our reporters reported that deal is set to be announced next week, a $400 deal. That's exactly the type of thing I thought would be on ice right now, but it seems like things are chugging along on the deal flow side of things. What's your view?
I think, well, one, you're right. Like everybody and their mothers was trying to raise in kind of Q1. We saw a number of companies coming out trying to raise money, whether it's a new company or existing one raising new financing. But again, I think a lot of those models need to be kind of rejiggered to incorporate kind of this new normal of where price is and where just general activity is, right? And so the Binance deal, when we saw it, and I was talking with my colleagues, it was surprising that the number was pretty big, I think, right? I think we can all agree that number is pretty big.
Yeah.
But if you're a larger player in the space right now, you have to be looking at all sorts of deals to basically consolidate, whether it's competitors, service providers, or folks like that. So if I was in a position like Binance or Coinbase or some of those other folks that have a much longer term vision on how things will play out, I mean, I'd be looking to scoop up companies left and right, especially given the current landscape.
That's interesting. So what about, let's focus on this deal just for a second.
Yeah.
It's so newsy. Um, is this Binance's jump the shark Poloniex moment, or is there real value in CMC from a traffic perspective, or can they maybe, I heard a rumor, this isn't confirmed, that they might start charging exchanges that are linked up to the platform. How can they really leverage this new property?
Sure. So there's two data points. I think the first one is the money that they were bringing in from ads. I think people had estimated somewhere around like 100 to 150 million that they had done since they had launched. So that's one important key factor. Then the other one is, especially for trading firms, there's this concept of a theoretical value, or what the value is of the positions that you manage. Many trading firms in this space, we did it different at DRW, but many trading firms in this space will link up to a third-party provider like CMC or CoinGecko or one of those sites, and that's where they'll get the price of the assets that they hold in their portfolio, or how to price off of. But obviously, that's not a perfect solution for trading firms, because that's assuming that price that you're seeing by CMC is assuming that you have access to every single liquidity point or destination that is encompassing that index price, or the fair value price of, let's say, Bitcoin. So at DRW, we actually calculated our own theoretical value of every single asset that we basically managed, traded, provided liquidity for, because you need to know what your true price of crypto was, or else then you're beholden to what a third party says. And you saw that, what was it, like 2 years ago, where CoinMarketCap like went offline, and like the whole world sold off. I think like the whole crypto world sold off, because people didn't know what the value of their holdings was. And then the other part was when the Korean premium, or the kimchi premium that people were talking about, when that blew up, the CMC numbers were all over the map, basically, because you couldn't access those liquidity points, but the price was 10-20% higher than where you saw it on Coinbase or somewhere else.
Yeah, no, that's a really good point. And it speaks to this trend that we will probably see pan out of service providers getting snapped up by larger players. But I guess it also plays into a point you made last night about infrastructure, right? You mentioned what happened when CMC went out. The infrastructure, that was one example of how the infrastructure in this space is still nascent and not at the point of where, more traditional players might be comfortable trading and interacting. I mean, let's be honest here. The fact that CMC is really the data hub for this space says a lot about how early we are. I mean, we don't even really know who the founder is. I heard that some employees have never even met him, right? So that's the data hub. That's a little suspicious, but it speaks to this nascent infrastructure, right? So let's talk about that. We saw May 12, 13. I mean, Gemini went down. BitMEX, some people suspect them going down was a result of a secret halt in trading. So starting up your own firm, being at DRW, I imagine most of the tech you guys built was sort of proprietary to sort of engage with the market in the way that you probably do in other assets. What is the state of infrastructure today, especially as you sort of, start this new venture?
Yeah, I think like what we've seen in the crypto space going back is that you have a very like vertical type of product offering out there in the space. I'm sorry, horizontal type of product offering out there in the space. And what I mean by that is that it's really hard to build a product that's very, very vertical, right? Meaning that like you've built products on top of an existing product and you've actually fleshed it out fully. Why? It's because the underlying market itself, rules, regulations, things that you guys cover every single day, continues to change around you. And so how can you really build a really robust product and come to an agreement that, hey, over the next 6, 8, 12 months, I don't have to rebuild this thing. I don't need to break it down because, a good example is, you had a number of exchanges that were launched very early on. And it's still kind of king of the hill in terms of exchanges trying to capture market share. Why? It's because the underlying infrastructure and the underlying, effectively, the game is continuing to change every single day. So sticking with the exchange side, if you were an exchange 3 years ago, did you really implement any sort of staking reward service or staking yielding product out there? No, because you didn't have to worry about that at the time. It just wasn't offered there. But then look at today's world. If you're an exchange coming online, that's something that you probably want to tack on because that's something that your users expect now. So that's what I mean by it's really hard to build a product today that's very, very vertical because you just don't know what's going to happen at the ground level with the infrastructure side. But going back to the point about just like where the state of the infrastructure is, I mean, it's definitely come along a far way since 2013 or so, but it's still, I still feel like things haven't been stress tested enough. The industry likes to talk about, scalability and throughput and things like that. Well, whereas the protocols may be able to handle it because you have new blockchains coming online. The infrastructure that's being built on top of that, service providers, stuff like that, it still hasn't really been stress tested. I think you saw that a few weeks ago, but I still think it has a little ways to go.
Are you hearing from any exchanges taking action to start stress testing or making their infrastructure more robust?
I would assume that every single exchange does that on their own, right? They try to break their system before it goes into production or things like that. Like one of the things that we did at Paxos was when we got when we knew we got the trust license, which we thought, and frankly, it was a big deal for the industry because we were going to get treated like a bank. We said, we need to figure out that our system is not going to break if X number of people go and sign up right now. What is our input? If that many people sign up, well, how many can compliance handle per hour? And then you start to try to model out where in this type of scenario, we're going to be able to churn through 100 applications a day or something like that. So I'm sure every exchange does it now, but being in testnet versus prod is very different.
Yeah. As a user of some of these exchanges, what are some of the changes that you think are the most striking? Let's look at the glass half full for a second. I mean, there have been some improvements, and you talked about how they're trying to expand that product suite so that they can, differentiate themselves from the, every other week a new exchange appears to launch.
You're breaking up a little bit. Oh,
we're breaking up.
Yeah, sorry. Oh yeah, no, I hear you. Sorry. So
great.
So
no worries.
I think exchanges exchanges have been a big piece of both our investment side of things, so like longer term stuff that we're speculating on and putting a bet on, but also on our active trading side of things, whether it's trading the exchange tokens and things like that. And so on the infrastructure side of things, so on the investment side of things, one of the biggest things we look for is how are you going to track liquidity, right? So at the end of the day, you are going to go ahead and build this exchange and build the infrastructure. But if you haven't window dressed it appropriately, no one's going to come in and shop, right? Like if there are no mannequins with clothes on it and stuff to attract the customers, well, it's going to be really hard to gain traction. And so some of the best exchanges that we've seen develop, grow, and ultimately succeed in this market is that the ones that can address market makers, the ones that can incentivize the market makers to come in. And then once that's kind of window dressed, then you get the takers to come in, whether it's the retail flow or linking up with retail brokerages that you kind of see now that are emerging more and more, such as like, the Fidelities of the world, the even like some of the Tagomis of the world and folks like that.
What do some of those, a lot of those incentive structures, even in traditional markets, are opaque for people who may be listening who, aren't necessarily plugged in with the trading world, the market making world. They might not even know that some of these incentives are there, nor do they know about the ongoing debates we see in equities about rebates and the efficacies of them in traditional markets. Is it as opaque for you guys? Are the terms sort of laid out? Do you know that you as a market maker on this platform is going to be cut the same deal as another one? Are those fee schedules laid out? What does that sort of look like?
Yeah, I mean, I think that if you're a market maker, you should have that transparency from the company, and the exchanges that do it the best do provide that level of transparency in terms of what's the fee structure look like. At the end of the day, when you would look at an exchange to market make on, there's a price, right? There's an expense tied to you actually providing liquidity on the exchange, whether it's cost of capital expense of just holding coins on the exchange in hopes of that someone's going to trade against you or trade with you. And so all those become very big contributing factors to when you go ahead and decide to go down the market making route. Because it's not just, I mean, at least at DRW, it wasn't just, hey, we're gonna plug into the REST API and then we're gonna start streaming prices. I mean, there's a lot of infrastructure that comes into play. I think early on, market makers were able to do that because they were more nimble, they were smaller, more nimble, and weren't as big as like a DRW was, let's say. But at DRW, I mean, there are layers and layers of departments that you need to kind of get buy-in on before you went ahead and started just trading any product at the end of the day. But that goes to, I think, the idea of how DRW looked at risk management, how DRW looked at how they were actually deploying capital, where they were deploying capital to get the best return for their money at the end of the day.
No, it's super interesting, and we could have a whole hour-long conversation about the market structure. But I want to stay on topic regarding just the state of deal flow and the state of fundraising in this market. Since you guys are investors in addition to being traders, and you guys are growing, you've hired a few more folks. That's great. You brought on some good people.
We're not letting go of anybody yet.
No, thank goodness. Thank goodness. I mean, poor Nick, right? He's been everywhere. He's like Johnny Cash, but crypto trading version.
Yeah, I mean, I saw the podcast yesterday with Max, and I think you asked about like, hey, working in an environment where that's been impacting, right? The workspace has been impacted, given broader macro stuff. And so I think for us, we had already worked, and to his point, crypto had already been very decentralized from like a resource perspective. And so I feel like people are more adjusted to be able to work in that type of environment because they are using apps like Crowdcast, or they're using apps like Slack and things like that to talk to their team. Maybe their engineering team is completely off-site, and it's cheaper to get engineering somewhere else. And so, one of the things, the thing that Max was talking about yesterday was about communication. And traditionally, right, at banks, you have sales traders and traders sitting back to back with one another because that's like the most ideal scenario for communication, right?
Yeah.
One side is servicing clients, and then the other side is actually managing the risk associated with those trades. We kind of did it the same way at DRW, but like communication tools and verbiage was super important, right? So making sure that what you're saying across a mic, which every single trader had a mic, whether you were in Singapore, in Europe or somewhere else.
And that would blast across the trading. That would blast across.
Exactly, it would blast across everywhere, right?
Yeah.
And there's no delay because of the technology that we're using. And so it was very important that everybody was on the same page, especially working in like a 24/7 nature. But I feel like the crypto industry is better positioned for that because of just the upbringing of like the decentralized nature and people coming from all corners of the world.
So it'd be something as simple as, you'd get the unemployment numbers from Goldman Sachs. They sent their research out this morning, and you'd put into the mic, 15% unemployment mid-year, and that would just blast across everywhere.
Yeah, that's right. So you would just want everybody to be on the same page at the same time. And so that's I think that's super important in today's world, especially with, and I'm sure all of us are reading different types of media and news and trying to digest what's actually happening, what's real, what's not. And so that level of communication is key.
Mm-hmm, mm-hmm. And yeah, I think the crypto world is definitely better positioned. I mean, at least from our perspective, we've always had, folks in different areas of the world, and so it's kind of not that big of an adjustment to make from a workflow perspective. But getting back to just the broader environment and the state of fundraising,
Mm-hmm.
what are companies? What are you telling companies they have to do? What are you looking for now? What had a deal on the table a month ago that's not on the table now? Kind of a loaded question, but you can sort of unpack it the way you want to.
Yeah. So we feel like our best value add as investors is on the infrastructure side. So let's talk about exchanges, just because that's what we know, what we is in our DNA, right? So we're able to leverage like a lot of experience that myself and my partner Dan Matuszewski has had, whether it's like operating behind the scenes of an exchange, market making on an exchange, or just being a customer on them. And so now we're coming full circle and now investing in these exchanges. And so it kind of goes back to my first point about like, how do you attract liquidity in such a fragmented market? Why is your product so much better so that someone is willing to go through the headache, some headaches of onboarding at the exchange, managing that account, and the associated activity with it? And so that's like a very big point that we harp on. And those that don't have a really good story or roadmap of how they're going to do it, like the product roadmap, I understand, but if they don't know how they're going to differentiate themselves, that's a key point. And one of the things that we kind of look for are differentiating tradable, I'll just say, I guess, products at the end of the day. So Bitcoin USD, like that's not that interesting. Can you offer basket type of products that give me broader exposure and probably spread my risk out a little bit more? That I don't have to bet on one single coin. That's interesting to us. One of the big things, especially given the backgrounds of my partners, Dan comes from a vol background, and those are types of products that we tend to gravitate towards because it's kind of like within our DNA. So we really try to press on product offering and just how, and you're starting to see it. You're starting to see exchanges start to cross over to whether it's like more VIX-ish type of products or more vol-based products, or even like some of the decks that we've seen are like they're trying to incorporate like various synthetic equity type of offerings. It's only a matter of time, I think, that ends up happening.
Well, wouldn't it have been great to have a volatility linked product right now? I mean, that would have been great for this market environment, but there's nothing really there at the moment.
There are some exchanges out there that will do that. The ones that kind of come to mind are like FTX provides like a move product that you could basically bet on the volatility effectively. There are a number of new exchanges coming online now, even certain dexes that are trying to incorporate that as well. And so even within like the exchange world, you have like exchanges, but then you have centralized, decentralized, and you have different offerings within it.
Do you think that a month ago, maybe like more than a month ago, let's say early February, when you were looking to deploy capital, it would have been more of a mix? So maybe like 50% exchanges, 25% to service providers, 25% to protocols. And now that we're really in a market where the businesses that are going to do well are those that are based on or built on transactional products. Has that shifted your sort of thesis from maybe a mix of different types of companies to strictly, all right, let's just focus on exchanges and maybe trading firms that are getting these flows?
Yeah. So I think like going back to like when we, at least when I first started looking into the space in like 2013, right? Basically, the idea was, hey, here's this product. And at the time, I was working at a company called Second Market, which turned into DCG, Digital Currency Group. And it was kind of like blank canvas. It was like, hey, figure out what this market is. Who are the players? How big it is? Where did the flows go? Basically, where are all the bodies buried? We kind of took the same approach now coming into like the investor side of things. It's hey, who are the major players? Where's deal flow going and originating out of? And in the beginning, when we started CMS, it was more like, let me get a sense and a flavor for what the deal flow looks like and the structure as well. And so we started looking at everything that you could imagine. We looked at, security token offerings related to products that we just wouldn't really invest in, but we needed to get a sense of what the world looked like and what people were investing in. Then we started looking at, well, what are we good at? Where can we actually be a value-added investor in this space? And it just came natural that it would be exchanges, just given our experience, right? We are most likely never ever going to start an exchange. And so what's the next best thing that we can do? Well, we can help build one as an investor and use that like experience and that knowledge. And so I would say if I had to think about like our investment side of the portfolio, I'd probably say about 3/4 of that, of the deals we've made, have been towards exchange. Whether it's investing in their tokens or investing in equity. But we really wanted to, it is sad, but that's kind of how things have shaken out.
Is this, are any of them public? Can you talk about some of the companies? I want to put you on the spot, but.
No, I mean, there are a couple that we've been public about. I know BTSE is one that we had invested in those tokens as well. And a few others out there. There's some that are coming online now that we've invested in. And look, it's everybody. A lot of people come from the same backgrounds, and then they're diving into the crypto space and trying to figure out the nuances related to it. So what we try to do is just say, hey, look, there are a lot of lessons that you're going to learn along the way, but maybe we can help alleviate some of them before you end up being faced with this issue of even like simple things like, hey, well, you probably want to be able to export data this way and make it more uniform because it'll be easier for an institution to consume that in their back office than a different version than you have, right? So again, leveraging our previous experience to just show like, hey, let's make it as easy as possible for an existing customer of another exchange to transition to yours and make it as seamless as possible, because the traders will all want to trade there if there's liquidity. But then you got to think about the middle office, the back office, and those conversations that those stakeholders are going to want at the end of the day, because it's going to be work for them.
You got to make it as seamless as possible in order to get folks on board and then build up that liquidity. On the other side of it, I'm sure there's cost cutting going on right now. The crypto world is known for its frothiness and for its lack of discipline and for its abundance of Lambos.
Yeah.
How do you? Well, maybe not so much more now. We're maybe dealing with Acuras and
it's still a good car. Still a good car.
It's an all right car. Yeah. It's all right. So in that environment, how are you seeing exchanges cost cut?
I think you need to really rein in so okay, in the beginning, if you're an exchange, you want it to be everything to everyone, right? The landscape was just so wide open. And there are companies that are no longer around that basically want to do that. And they realize it's just way too hard to be that spread thin. And so I think what you're seeing is certain exchanges are specializing in the regions that they are basically able to attract clientele or customers, what they're really good at. So, if you're an exchange in Latin America or in South America, well, you just know your customer base that much better. You know the payment rails that much better. So what we've seen is geographically, exchanges just get better at their own region. And then from there, I think it becomes an interesting conversation because one, you kind of become an acquisition target for some of the larger exchanges out there that say, hey, well, we're never going to enter that market because it's just too hard, right? It's just too hard regulatory wise, just resource wise and things like that. That's an
interesting point. That's interesting.
Yeah,
go ahead.
Oh no, I was just this is kind of what we've seen because companies early on tried to just do everything for everyone. And so you
Yeah.
have like customer service reps that can speak like 10 different languages, and it becomes a little bit too it becomes too much to manage at the end of the day. You end up doing a lot of things average and not a small number of things great. And so I think we're going to start to see this like regionalization of exchanges. And then ultimately, I mean, you're seeing it, like I think Binance announced yesterday or the day before about them launching the Korean exchange. I think you guys broke that actually. So
Probably.
yeah, so this like regionalization of, hey, let's like actually build out infrastructure for those folks.
How important is that liquidity for you guys? Do you feel the need to link up to a Mexican exchange or a Korean exchange, or do you keep it for the most part domestic?
We keep it for the most part domestic. We don't since we're not providing liquidity or market making. We'll keep an eye on what those exchanges are doing just from a volume perspective in case we want to maybe tap into it. But arbitrage is not our game.
Okay, sure.
The at the end of the day, the current incumbents in the, let's call it the market making liquidity providing space, I mean, the ones that are ultimately going to win and are winning are those that have the best technology, right? So their technology is going to let them offload risk and manage risk better than anybody that's trying to do it themselves, or is like two people trying to market make. You may find a particular arb here and there, but at the end of the day, the market will always get efficient. And and you've seen it over the last few years with newer entrants into the market. The spreads have come in, and the basis trade has come in as well.
We've seen a little bit of a widening with the recent volatility, but still way down from 2017 when the cuppeth overflew with that opportunity to tighten those spreads. We're getting.
That's natural, right?
Yeah.
When you have moments of like high volatility, well, the spreads are going to continue to widen because the market makers are taking on risk left and right, right? And so they tend to widen out. But if what happened a few weeks ago probably happened in, let's say 2014, I mean, spreads would have been 1,000-point wide versus like hundreds of points wide, right? It's so spread compression has definitely happened over the last few years. Which is a good sign. It's good for everybody kind of all around.
Do you think that I want to be respectful of your time? We're getting over the 30-minute mark. I'll end with this last question about whether or not we're seeing a shaking out after May 12, 13. I wonder if we report on adaptive going out. There was even some traditional trading firms that went out in the midst of this coronavirus stemmed turmoil and volatility. You've seen all the different market cycles and how they've impacted the participants. Do you think something like May 12th, 13th has spooked people out, has blown some firms up, or is it more sanguine than that?
I think it's two approaches. I think the one, like the things that you guys report on, I think you've seen a shaking out of those firms and a closure of some of them because of their strategies didn't work out. They didn't maybe manage the risk as appropriately as they should, whatever the story is. But I think you're going to have a longer tail of companies that are still going to try to raise. But ultimately, I think what's going to happen is towards the end of this year, Q4, Q1 of next year, you're going to see some serious M&A. And I think and going back to like the beginning of the conversation, you're going to start to see some of the bigger players coming in and stepping in and saying, this is a great time because we can either hire a bunch of folks by acqui-hiring them, or we can just completely squash some of the competitors out there by just absorbing them and just completely just taking them on. So there's like this very interesting dynamic that I think will play out. But it goes to the tune of, I think at the end of the day, there are probably too many products chasing too little customers right now.
Sure,
so
of course.
The shakeout should be good in terms of building better products in the long run and also being better for consumers.
What would be the deal that you think what would be your dream deal, or the merger that would make the most sense to you? Is it It's not Binance CMC, but it might be something else.
Oh man.
It's a tough one. It's a tough
I'd
question.
say maybe like a large. Well, you've kind of already seen it. Like Zappo got sold last year, I want to say. I want it to be more like a marriage like that, where it's very synergistic. Where look, custody is an annoying problem in the crypto space. Managing different software at the end of the day of version 0.001 of some of these protocols, it's tough, right? And so there's a reason why people pay custodians to do that. It's a very having done it firsthand, it's very annoying. And so I would imagine that companies would look at it and say, look, well, we don't want to focus on that. You guys have already built a product. Let's just absorb you, right? Whether it's maybe BitGo's too big now, but maybe something like that. Where, but ultimately, the space right now is still very. I think everybody would agree it's still pretty blue ocean. It's still king of the hill. No one has really taken over for a long period of time the top spot of market share, exchange-wise, custody-wise, things like that. So when you have that type of dynamic, as entrepreneurs, you just want to keep trying to win, right? And you don't want to acknowledge that it's too competitive, because I think they still see it as blue ocean.
Bobby, I think that's such a great point. We're so excited you came on. Fun fact, CMS was actually the name of my elementary school, so I feel like a deep connection to the firm. Bobby,
truth be told, we didn't even name ourselves.
Who named you?
The lawyers.
The lawyers.
Yeah, so we were so focused on other parts that they were like, well, what do you want to name yourselves? We said, I don't know, you guys come up with it. And so that's what they did. And so it's
what is it? Does it stand for anything, or
they
pull letters out of a hat?
Cho, Matuszewski, Colin Seguin.
Oh, there you go. I love it. All right. Well, CMS Trading. Bobby Cho. Thanks for coming on.
Thank you.
Peace out.